Good to go?
Hi everyone, I'm Katya Rami, and today I'm doing a stock pitch on General Motors. So let's look at some of the company background on General Motors and ask ourselves, what is General Motors as a company? They're a multi-billion-dollar company and the world's largest car and truck manufacturer. They have an international presence. They own the brands Alfion, Buick, Cadillac, Chevrolet, Wuling, and more, which are all international brands. They have diverse products from aircraft engines to construction vehicles and even military vehicles too. And they have an innovative nature. They were the visionaries that created the Chevy Volt. They are working on self-driving cars and car-sharing services. So my investment thesis for General Motors is that they're currently a strong buy. My target price is $55.40, and they're currently valued at $31.18. So this is clearly a significant increase, and we have to ask ourselves, why is this? Well, there are three main points to their profitability. Well, they're a historically strong brand. Secondly, innovations offer huge potential. And thirdly, they have currently extremely low stock prices and huge potential profits in the future. So let's look specifically at them as a historically strong brand. They've been around for over 100 years, and they've been successful for over 100 years. They're the world's largest car and truck manufacturer, as I mentioned earlier. Now, they have 18% of North American automobile sales, and a significant portion of international sales as well. General Motors filed for bankruptcy in 2009. This was caused by a stall in innovation, high employee pension costs, and economic downturn. But all these things have turned around for General Motors. They have started innovating more. In 2011, they came out with the Chevy Volt, which is the first car that you can charge with a regular household plug at home. This was in response to the public's need for a car that was fuel efficient because it could be electrically charged. And this was especially helpful at the time of an economic downturn. They cut pension costs also, which helped them, and they are now, again, a strong brand. So we're looking at innovations here that offer huge growth potential, as I mentioned earlier. Current innovations with self-driving cars and car-sharing services are the most prominent ones. However, they also have experience innovating with lightweight vehicles, with engines that are run on fuel-efficient fuel sources. But specifically looking at self-driving cars and car-sharing services. Earlier this year, they established a separate division for autonomous vehicle development. And also, they acquired Cruise Automation, a software company that works on creating software for self-driving cars. Now, also earlier this year, they established Maven, which is their car-sharing fleet. And they acquired Lyft and Sidecar, which are both competitors to Uber. So let's look at a specific innovation that they've created. Self-driving taxis. As of earlier this week, I believe on Monday, a report came out in the Wall Street Journal that General Motors announced that this following year they are launching their self-driving taxis in the city of Chicago. Now, every other company that's working on self-driving cars, Google, Tesla, Uber, they've tried their self-driving cars, right? But in a controlled environment. General Motors is the first to take their self-driving cars to the public. Now, when a person wants to call a Lyft on their phone, they open up the app, and they have a choice between either a taxi driver or a self-driving car. They're the first ones to do this, as I said, and also they're years ahead of competitors. Tesla and Uber have proposed negotiations for the year 2020 to start working together. It's already 2016, and General Motors has begun innovating to this extent. So low stock prices and big profits. Last year, Cadillac sales were up 8% globally. Buick achieved its third consecutive global sales record. North American Chevrolet sales were up 6%. The price of General Motors stock is still low. Now, this is in part due to the bankruptcy in 2009, but they're recovering fast. Now, according to the discounted cash flow model for intrinsic value, I found that General Motors stock has a value of $55.40. Yet they're still valued significantly lower at $31.18. Revenue drivers. So I'm saying their profits are going to go up in the next few years, but what is driving these profits? What are the revenue drivers that are bringing in this money to the company? New innovations. General Motors Research and Development Innovation Challenge started 3 years ago. Now what this is a competition within the company for employees where they can present their startup ideas. General Motors starts 10 new internal startups because of this competition annually. They are advancing quickly in the fields of self-driving cars and car-sharing services, as I mentioned earlier. They're also creating lightweight vehicles. They're also creating vehicles with renewable energy. And these have been advancing quickly. Even the military is beginning to come to GM and ask them for their lightweight vehicles and working with them in that sense. They're an established brand and own 13 renowned brands internationally and a significant portion of the market share. They also sell automobile parts. And the profits of automobile parts is in the billions of dollars. They make 30 to 40% margins off these car parts. Now, I want to look specifically at trucks because this is a large portion of the domestic sales. It is 13% of the US market share. And General Motors owns 39% of this. They're selling 39% of the market share for trucks. General Motors truck sales were up 8% just this last year. Now, let's look at the finances of this company so we can really see the statistics that we know that General Motors really is, in actuality, going up. Let's look at the probability. In 2015, their fourth quarter profits were up 26% from the previous year. Now, their net income also increased by 17%. And earnings per share in 2015 went up $5.90, and it's expected to go up significantly more this year. Growth. Past 5 years, the company had an average growth rate of 2.35%. Now, this is relatively low if you look at the industry growth rate of 4.93%. However, analysts say that there's going to be a growth rate of 10% for 2016 in the following 5 years. Now, when we look at the 2.35%, we're obviously going to be concerned. They're obviously falling behind, as it seems, with that percentage. But just 2 years ago, in 2014, CEO Mary Barra became the CEO. Now, she's turned this company around. She has made it more technology-oriented instead of industry-oriented, where they're just selling commercial vehicles. And with these new innovations, they're expected to go up even more. In terms of liquidity, in 2015, they had a liquidity of 1.09 and a free cash flow of $1.5 billion. And we know they are a multi-billion-dollar company. Now we want to look at the entire automobile industry. Recently, with gains in employment, growth in personal income, low interest rates, and also record-breaking low energy prices, spending is even stronger. The general public, when they see the low gas prices, they're fooled into believing that these gas prices are here to stay. So they go out and buy more vehicles, which is therefore driving up the industry sales. And as we see, in 2015, it was the 7th consecutive year of increase in automobile sales, setting a record at 17.5 million in sales. They also have a huge future in car sharing and self-driving cars. There will be a high demand for these new types of commercial automobiles in the future as we transition over to self-driving cars, which is expected to happen in the next 10 years. And with GM as the head of this new innovation, there's huge profit potential. In March 2016, it has already shown that 7.3% sales increase since March of 2015. Now, investment risks. So when we look at General Motors, there are several risks, but as smart investors, we know that the profits they have even higher potential than the risks are concerning. So innovative risks. General Motors has potential profits in innovative markets that are highly competitive with Silicon Valley companies including Uber, Tesla, and Google. But as I mentioned earlier, they're years ahead of them in their innovations. Prior bankruptcy. General Motors went bankrupt in 2009, as I said, and although they addressed the causes of bankruptcy, the public is still skeptical about whether General Motors is going to be doing well in the future. But as smart investors, we know that this is not a concern. General Motors has become almost an entirely new brand, as they are more focused on technology. Competition. General Motors has many competitors in the automobile industry, with Toyota being amongst the most prominent in the industry. And competitors pose a threat to taking General Motors' profits, but they're consistently outperformed by General Motors. Management and governance. Now, I mentioned that 2 years ago, CEO Mary Barra took over. She's been with GM since 1980 at age 18. She manages 215,000 employees, and she's virtually turned the entire business around to become more technology-oriented. She was the #1 woman on Fortune 500's list of most powerful women. Major shareholders, there's 27% major shareholders and 73% free float. Now, these major shareholders include Vanguard Group, JP Morgan Chase, and Berkshire Hathaway, which we know is led by Warren Buffett, just to name a few. Now, independence. The board of directors consists of 12 members, and all but 2 are independent or non-company executives. And there are no red flags since General Motors restructured following the 2009 bankruptcy, as one of these important things that they did to restructure was cutting employee pension costs. Now, I rate General Motors as a strong buy because of their innovations, because of their technology-oriented outlook, because of their powerful CEO who is turning this company around, because they're a strong brand, and because the automobile industry is going to be doing much better in the following years.